What's up, guys? How's everyone doing? Welcome back to episode 5 of Sniper Sundays. This is a series where we go over all of the trades in the week before, or as you're watching this, obviously it's the current week, and then do some analysis to predict what's going to happen in the week ahead within the financial markets. So I realised the track record tracking system was a little bit weird. I even confused myself at one point. Basically, it says here episode 4, but obviously this is episode 5. Reason being is because it's since episode 4. So obviously episode 1, I couldn't start out and be like, here's all the trades from the week before, because I didn't predict anything for the week ahead. So obviously episode 1, I'll show you here. Obviously this was declared on episode 2, so it's since episode 1. So obviously I'll go through all of my trades, whether it won or lost or hit break even, show you the complete results and how much I'm making week in, week out inside the VIP group. So I've fixed that a little bit, and I'm going to call it since episode 4, which gives us now episode 5. Okay, so hopefully that clears things up, because I even confused myself last episode, put out episode 4, but the track record said episode 3, because it's since episode 3. Now episode 5 is since episode 4. So hopefully that clears things up. This week I've took more losses than usual, but I still came out in profit. And the reason you can do that with my strategy is because the amount you make when you win is so much more than the amount you lose when you lose. And that's a sign of a good trading strategy, okay? I've had a lot of education given to the members this week in terms of taking losses. And what you need to realise when you're trading is taking losses is absolutely fine. If we look back through the track record of the previous videos, like I do take losses, I hit break evens, it's completely normal in trading. You don't even need to win more trades than you lose in trading if you've got the right risk to reward ratio. So that's a stigma that I really want to break, which a lot of these scammers and fake traders online that you see, they all claim that they've got like 90% plus win rates and they never lose or they don't show any losses. And it makes it really hard when you're learning trading to meet those standards, and you sort of feel like you're doing something wrong if you're not winning every single trade. And that's just absolutely not the case. So don't be fooled by all the guys that are just scamming or pretending, or these fake trading gurus online. That is not the reality of trading. And this episode will really prove it to you. I lost more trades this week than I won, and I still made money. We all still made profit inside the VIP group. So without further ado, let's get into it and really break it down, what happened this week. So we started off with a dollar Swiss swing position where we hit TP2 and then we went on to hit TP3. This is the trade that you see on screen. I believe in last episode you saw me catch this entry and we hit TP1 here. Okay, so what I'll do is I'll go on my clear charts tab and we'll break down that position. First of all, something that I want to start doing on these Sniper Sundays is I'll show you the trade that was called out in the signal group, literally as I called it. So here you can see the position beforehand, given ahead of time. Here's the entry that I was looking at. I said it was going to tap this level and come back down here. That's exactly what happened. Price tapped our level, came all the way back down here, and we made 5.66% profit on this trade, or at least 5.66 risk to reward. A lot of people have been asking about the take profits, what they are, what they mean, stuff like that. So I'll also break that down and show you how using take profits rather than just having everything exit here is a really smart way to trade. Okay, so for example, this position that we just caught on Friday, it's nearly hit TP1 straight away. Basically, there's a few different ways that you can trade using take profits, and it sort of depends what you're after and how you prefer to trade and stuff. My standard structure is to take 50% of my position out here, 25% of my position out here, and 25% of my position out here. So let's say I've placed a 1 lot trade entering here with my stop loss here. I'll have 3 separate positions running. I'll have a 0.5 lot trade here if I'm using that 1 lot entry example, 0.25 lots here and 0.25 lots here. So I'll exit throughout the trade, and what that does is it basically takes money off of the table as the trade's playing out. And if you follow my strategy and you follow me enough, you'll see that that's a really smart method for trading, because even if the trade doesn't go all the way to your final take profit as expected, you can still take most of your money out of the markets throughout the move as it played out in your direction. And it's a really smart method if you want proper risk management and to really maximize your win rate and how much money you're taking out of the markets, basically. So without further ado, let's get into it. So we'll look at dollar Swiss. And then if I check back, this was on the 23rd of January. Okay, so let's find that. 23rd of January. There we go. And this was at about midday UK time. So let's find it here. It was within this wick. Cool. Okay, so what we were looking at. So price was in this channel here. Okay. Let me take this slow. So we've got this uptrend with one touch, two touch. This forms our trend line. Okay, price is making higher highs and higher lows, and it's moving upwards. Okay, so what we wait for is this to break and show some weakness. Once this is broke, we refer to that as a break of substructure or a BOS. Okay, let me move that to the top so you can see it. After we have that break of structure, what then forms is this low here. I refer to this point as substructure. So let me draw that on. This is our substructure. The reason I call that substructure is because it's the first point of structure outside of a trend. Okay, so when price firstly leaves this trend, it hasn't quite yet proven itself as actual structure yet, because what you can see happen is price will often just come back inside the trend like that and just be a fake out level. Okay, so the first instance of price leaving that trend we refer to as substructure. In order for it to become structure, what you need to wait to see ideally is price come back up and use that previous trend as resistance like we saw here, and then break that low again. Okay, so once we've had that retracement, retest, and then break further, this now is what we call a break of substructure, or BOS for short. Okay, once we've had that BOS level, and it can happen flat like that, even better is what happened here, where we actually have an ABC correction. Okay, I'll show you what that is. So from the low, we have a high, low, and a high, just like that, where the high is breaking this high, breaks this high, and this becomes ABC. And that's, according to Elliott wave principles, is what's known as an ABC correction. So even better than the flat line is when you have an ABC correction like this, which then becomes the substructure, and this breakout here, okay, is a perfect level to catch a trade from, just like this. Okay, so this now becomes our break of substructure, or BOS for short, just like that. Again, let me put this on the right hand side for you. And then how we trade following my strategy is, once we have this break of substructure, we catch a retracement from this wave. So price comes down, comes back up, we catch a trade off this and trade lower. Now, what happened here, okay, is from this high to this low, just like that, price only came up to the 61.8 fib. Sometimes I'll trade off the 61.8 fib, but what I prefer is the 71 or the 78.6 level. Reason being is I like to have my stops above that previous high, like that. So if we're targeting this level here, this only gives you a 3.1 trade. This gives you a 3.1 trade when you're taking it from the 71. If you're taking it from the 61.8, you've only got a 2.2. So I prefer these two fib levels because they give you like 3R, 4R trades, whereas this only gives you like a 1 to 2. So this leg that pulled back up, this leg that pulls back up there, we didn't actually trade from that level, but it still broke lower. Okay, so that was a trade that we missed because it didn't pull back enough. Now, when we've had this, so when this broke this low again, it's another break of structure to the downside, and that's our third break of structure. This gives us one more opportunity if we want to catch a trade, okay? So after this level broke beneath and started retracing higher, this is what we were looking at to catch a trade from, okay? So what we did, same as what I've just showed you before, is we took the fib level from this high to this low, just like that. And now, because we had this fair value gap all the way up here, which is a key area of inefficiency, not only was it a fair value gap here, it was also a fair value gap on the upside as well. So when you have two overlapping fair value gaps, just like that, it's what's known as a balanced price range, and it is basically double the effect of just a singular fair value gap, okay? So because we had this zone of inefficiency within the markets, we were able to catch this trade from the 78.6 fib level, okay? So remember before when I've just told you that you can target higher up levels in that retracement to get a higher RR? Well, this is exactly what we did. So we had our stops about up there, and we had our TPs all the way down here, okay? So I'll break down, I think I have my stop loss 1 pip wider than that, about 200, just like that. And then I had my TP1 here, TP2 here, and TP3 here, okay? Just like you can see there, okay? TP1, TP2, TP3. So, price came up, wicked us in, hit TP1, hit TP2, and hit TP3, just like that. So within this current week, we caught TP2 for about 4.25R on our trade, and then TP3 on our trade was about 5.66R. So I took 25% of my position out there and 25% of my position out there, and in total I made about 2.5% from this take profit and this take profit. Obviously I still took 50% out at this level, but obviously that was on the end of last episode, so I'm not counting that within this week's track record. That's already been accounted for in last week's 6% that we made, okay? So being fair, within this week I'm only allocating 2.48% to the track record based on TP2 and TP3. Let's move on to the next trade. Aussie dollar, US dollar, and this was a swing position where we hit stop loss. So let's have a look at that. Load up Aussie dollar. And let me just check within the VIP group when I sent that one out. So this was 27th of Jan, about 10 AM. 27th of Jan, 10 AM. There. Let me add a line on. And this was a swing position. So what we were looking at here on Aussie dollar is we had this downtrend, okay, 1 touch, 2 touch, this was our trend. Price broke higher out of that trend, okay, so that was our break of structure. Go boss, just like that. So that was our break of structure. Now we had the break of structure, and we had what formed here was substructure. Price came down, retested the previous trend as support, and then broke higher, like that, okay? So let me draw that on. This was our substructure. Support, retested it again, finally broke out above, okay? So now we have the break of substructure, just like that, okay? What we were looking for is for price to trade from this low to this high, pull back into this level, and then keep rising higher, okay? So it was something like this. That was the trade that we were looking for. So if I plot that, it was something like this was our entry, this was our stop loss, this was our take profit. And as I said to you, we took a loss, okay? So this lost us 1%, just like that. The trade was valid, the analysis was valid. This is literally just the nature of the game. It's a probability game. Trading is not a science where you're saying, if this happens, then this happens. It's more of a statistical approach where you're saying, if this happens, then this is likely to happen, okay? And then even if you've got a win rate that's pretty moderate, like 50%, or even a low win rate, like 30%, you're not even just saying that it's likely to happen. You're saying that when this happens, I make this much. When this doesn't happen, I lose this much. And this gives us an edge in the markets, so that if you add up all the times that it wins, multiplied by how much you make when it wins, and then take away the amount that it loses, plus multiplied by how much it loses when it loses. So hopefully that's not too much maths talk. Basically that's just saying, every time this wins, I make 4.25%. And every time this loses, I lose 1%. Let's say I only have a 50-50 chance of this trade winning. If I take 10 trades, I'm going to win 5 and lose 5. The 5 trades that I lose a total of 5%. But then the 5 trades that I win, with this risk to reward, I make 20%. So you've made 20% from 5 trades, you've lost 5% from 5 trades. After 10 trades, you've made 15% profit. So it doesn't even have to like win more than it loses. You just know the numbers based on what is your win rate and what is your risk to reward, okay? And that's trading. So really, honestly, do not get scared when you take losses. As long as you have a proper, valid strategy that has an edge on the markets, you're going to lose. There's no strategy out there with a 100% win rate, okay? And even the ones that have a high win rate, like 90% plus, they're taking trades like this. They're taking shit trades. That of course they've got a higher chance of winning because they're not making much when they win in the first place. So then when they lose, they're losing a lot more than when they win. And that's not the best way to trade. Look at that shit position. There's guys out there that will say they've got a 90% win rate because they're taking trades like that, and they'll not show you the analysis. But trust me, when you trade like this, you make a lot more money, and this is how the pros do it. So ignore all the waffle out there online. They've got no idea what they're talking about. They're just trying to use shiny high figures to lure you in. And most of the times, they can't even talk through a chart. They just fucking flash materialistic things at you and try lure you in with shiny objects and stuff. They don't know how to trade, okay? This is how you trade. So there we go. Aussie dollar, US dollar lost. Next trade, New Zealand dollar loss. Pretty similar position. New Zealand dollar. Very correlated pair. So, similar story. Okay, we had this trend. 1 touch, 2 touch. Like that. I think it was this trade, or maybe it was this trend. Let me just double check. Yeah, it looks like it was lower down. So I think it was this. Trend here. This was our downtrend, like this. You notice here, price did break above it, and at the time that price broke above, we were looking at this as substructure. But like I mentioned to you before, price just came back inside the trend. So because it's came back inside the trend, it's not even a breakout. It's just a fake out at that point, okay? If you take those two candlesticks together, it doesn't really show it on that. They were on two separate 8-hour candles. Basically, if you combine those two candles together, you can see that it's just a wick. Price is just wicked out across two candles, okay? So this wasn't even a breakout. This was our breakout level, okay? So this was our point of substructure. So if we analyze that now on the 1 hour, price broke above. We had this level as substructure, like that. As soon as price broke above from this candle, this becomes a break of substructure, okay? What we looked at there was for price from this low to this high to come back down here and push higher, just like that. So we set up our trade, which looks like that. From an area down here, stops beneath the low, TP all the way up here, and this one got stopped out. Okay, let me find the stop loss in the position, in the group, sorry. So there's our Aussie dollar loss, as you can see, and here is our New Zealand dollar loss. That was a loss. Okay, so like I said, losses happen, don't get scared of them. We only lost 1% both times that we lost. Okay, so it's absolutely fine. So New Zealand dollar loss. Next one, euro loss. I told you there was a lot of losses this week, and I still made money. Okay, and we can add all that up and show you exactly the maths that I'm talking about. Okay, it's literally just the law of averages playing out. So euro USD, this trade, let me find it, 28th of Jan, about 9.50. So we go 28th of Jan, about 9.50, about there. This was on the 5-minute time frame. Let's dive in and take a look, shall we? So we'll find our line. There you go. What we had here was the Asian session range. Okay, so let's plot that Asian session range, just like that. Make it pink. This was our session range high. This was our session range low. Now this was an intraday trade, so a little bit different to the free trades that you've seen before. What we saw is that price swept the Asian range low, just like that, and then reversed higher. Okay. What is a valid schematic that we trade is that price breaks the Asian session low or the high, just basically sweeps one of these sides, and then has a change of character to the upside, comes back, and then taps this other high basically. So it's a complete sweep of the Asian session high and low. Okay, so we had this sweep. This was followed by a change of character to the upside. We had valid areas of inefficiency left behind in the market. There's your fair value gap. We looked for a fib level to trade from, that low to that high. We had the 61.8 there. As you can see there, it was a 61.8. So we had our entry here. TP was targeting this Asian range high, just like that. And I put my stop somewhere beneath this low, so it's still beneath the Asian session low. And again, I got stopped out. Minus 1%. Absolutely fine. Don't care. It was a valid trade. As long as a trade is valid, whether it hits your stop loss or TP is kind of irrelevant. If you've got a strategy with a 50-50 win rate or a 50% win rate and the trade's valid, you take it. There is a 50% chance you win and there's a 50% chance that you lose. And that is the risk that you take when you place your trade in the market. So this is why you only place like 1%, 2%, 5% on the trade. Okay, you're not putting the whole house on it every time that you trade. So in the long run, if you've got a profitable strategy, you want to have a large sample size of small controlled bets. And that's basically what we're doing, okay? So we lost 1% on that trade. There we go. We're now three losing trades in a row. Okay, what to do? It's not the end of the world. New Zealand dollar day trade is up next. So this one was on the 30th of Jan at about 11 AM. Okay, so we go New Zealand dollar. This was a day trade, so I'm on the 15-minute. And we go 30th of Jan at about 11 AM. That was there. Okay. Right. So this analysis is going to do some top down. So start off on the 4 hour. What we had here originally, okay, this is following the loss that we took on New Zealand dollar. Okay, so let's just understand that. Remember we had this position, price came up, we looked to buy it up here, and we got stopped out. So let me just draw that position on there again. It was something like that. TP's up there, SL beneath this low. Okay, something like that, and we got stopped out. From being stopped out, price has broken this low. So now we're no longer uptrending, making higher highs and higher lows. This low being broke means it's suggesting the start of a downtrend. How do we confirm that? Okay, let's think about what we said at the start of the episode and just the strategy in general. Okay, we had this uptrend. Okay, price was making higher highs, higher low. This is like a fake out essentially. So where you can plot a trend like this is valid, this is valid, this is valid. This is kind of your fake out that I mentioned before. Price broke beneath that. Cool, we've got a break of structure. Bring it up to the top. Now we have the break of structure. What do we look for? A level of substructure, which was this. Price came up, broke beneath again. So it's a second break of structure in the direction, which is our break of substructure that tells us price is trying to trend lower. Okay. Now, I was already long in this position, and this move down is what stopped me out because my stops were below here, remember? So this is what stopped me out. Okay. I wasn't trying to instantly revenge trade it and look for a trend in the other direction, but if I was, I would have caught a position from this low, this high, take it from a fib level, take it lower. And I would have made profit from that move. But I wasn't revenge trading, trying to seek another trade in that direction, which is usually a recipe for disaster because you're trading out of emotion where you instantly take a stop loss on a long and then you look for a short to make it the money back. It's not a healthy mindset to trade in. But, you know, after a bit of time died down, I did recognize, okay, now we have that break of structure, break of substructure in a new direction. So following that move on the 15-minute time frame, what we had is a B, C correction. And then that broke out to the downside. Okay, so we plotted this. Again, this is just a fake out. When you see the candle body closes once and then the next candle brings it back inside the trade, this is just like a fake out. A lot of beginner traders, you know, they'll see that close beneath the trend. It's not even a trend at this point, to be honest. But just for the sake of it, let's say this was a trend at this point. They see the breakout, they instantly try trade it. Okay, this is why you want to wait for substructure, and you want to wait for the second break of structure to really confirm that price is trading in that direction. It's not just a fake out like this. But anyway, we had this break of structure to the downside from a ABC correction. Price traded lower, and then you can see what we did here. Nope, that's the old trade. Here it is, New Zealand dollar. So we had this ABC break of structure, just like that. And because it's on the 15-minute, I like to label it purple so that I'm not confusing myself. Oh, I just changed the text to purple there. I like to label it purple so that I'm not confusing myself. So if you see me with like blue and purple lines, my blue lines are like 1 to 4 hour. My purple lines are like 15-minute, 1 hour trades. So I'm seeing two different time frame on one chart basically. But anyway, this was our break of structure, which is just continuing the downtrend. Okay, so from this point, we're saying, okay, price is trading bearish. We waited for another break of structure on the 15-minute in the form of that ABC correction before we just carried on trading. From this break, we took the fib level from this high to this low. So from this high to this low, waited for price to come up to the 71 level. We took a short from the 71% fib, stops above the high, 10 pip stop, and we had TP1, TP2, TP3, all the way down here, okay? So you can see this was the trade that we looked at, A, B, C, break of structure, wait for it to pull back to the 71 fib, trade it to the downside, okay? So then from that point, you see it tagged in there, that was our entry, TP1 hit, TP2 hit, okay? So like I said, we have TP1 at this low, we have TP2 at this extension level, and we have TP3 at this extension level. So TP1 there, I took 50% of my position out, so it was about, let me line that up better. It was about a 2.2R trade when I called it. So we took 50% out there, we made 1.1%, and then TP2 being hit was 3RR. We took a quarter of the position out there, so that's 0.75. So 1.1 plus 0.75 made us 1.85% from that trade, okay? And then the rest of the position, we changed our stop loss to break even. So after price came down here, almost hit TP3 and then came back up to this level. This is where we closed the rest of the position out at break even, so 0 net result. And then total result from that was that we made 1.18%. So those were all the trades that I took within this current week. We had dollar Swiss make 2.5%, we had New Zealand dollar make 1.85%, and we had 3 losses which lost 3% between them. In total, I made 1.33% this week, okay? I lost 3 trades. I won 2 trades. One of them didn't even go all the way, but I took 75% of the position out as it did. And in total, I still made 1.33%. So in one of my bad weeks, where I've lost 3 of the trades that I've placed and had a 3 trade losing streak, I've still made money, okay? So ignore this idea that you shouldn't lose trades when you trade in and stuff like that, because it's just completely not true. It's a very scammy sort of mindset when you see people that claim that they've got like a 95% win rate and they never lose. I've took 20 trades today and they've all won. Like those kind of guys, they're mainly using like grid strategies and martingale strategies and stuff like that. So they'll make a very small amount when they do win, and when they lose, they'll usually lose the lot. Okay. So yeah, there it goes. Running total now is like 20.3%. So first episode 5%, second episode about 7.5%, third episode 6%, and then this time we've made 1.3%. So this is the worst week we've had so far, but running total we're up 20.3% from the whole of Sniper Sundays. Each of these trades, I've literally shown you the before and after and explained the logic of why I've taken them and stuff like that. So here's my running total. I'm not hiding any losses. I'm showing you all the losses, all the break-evens, all the wins. You can see all of this inside my VIP group, and I call the trades out ahead of time. Okay, so there you can see there's the before shot, little updates, when we're tagged in, when the TPs are hit, etc. You can see me actually placing these trades as well. All my winners, all my losers. So that wraps up this week's trading. I made 5 trades, I lost 3 of them, I won 2 of them, and I still made money. January this month in total, we're up 15.1 RR. What that means is if you risked 1% per trade, you would have made 15.1% this month. If you used 2% risk per trade, you would have made 30% this month. If you're on a personal account and you risked 5% per trade, you would have made 75% this month, okay? And this is all called out inside the VIP group. We've currently got 1 open trade, which was this trade that we called on Friday at about 5 p.m. UK time. As you can see, this tagged in by the wick and then instantly shot up. Hasn't quite hit TP1 yet, but in next week's Sniper Sundays, I'm expecting you'll see this trade play out fully. This is a nice 4.1R trade, and all of the members caught this inside the VIP group on Friday, as I called it out. So hopefully this has been an educational video. If this has just gone completely over your head and you don't know where to start, watch some of my other videos, go through the Sniper Sundays, see the strategy in and out. You can join my free signals group where I'll post one free trade a week. And then I'll do some live trading sessions and stuff like that. You can watch the Sniper Sundays for free. Drop me a message and I'll send you my new starter's guide to trading, completely free. Basically explains what trading is, what the charts are, how it works. Uses very simple language, compares it to like betting on football and stuff. But you know, instead of betting for Man United to win, you're betting on the dollar to be stronger and stuff like that. So really base level guide. If you want that, drop me a message. And then the VIP group, we've just increased the price. We did have a lifetime option, but we've got rid of that now. The membership is now either £50 a month or you can pay £1 a day. So it's just literally £1 a day to be inside the VIP group, have all of this knowledge taught to you, have all of these trades given to you ahead of time, and invest in yourself to learn a high income skill that can pay you for the rest of your life if you use it properly like I do. Okay, so do drop me a message if you want to see more stuff. Check out my live trading sessions, which I host on YouTube. If you go in the live section on my YouTube channel, you'll see them all recorded after I've gone live. 5 days a week I'm live throughout London session trading. So tune in if you do have time. Until then, anything you want to see me break down, just comment it down below. Anything you want me to go over or explain, comment down below. Make sure to drop a like on the video if you do appreciate these. And yeah, I'll see you next time. Have a good one, guys.